Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IP Go, the show where we take a look at the IPO world, past, present, and future. We had another wobble in the U.S. equity markets, which could best be described as skittish right now. Things that were not a concern to investors a month ago now seem to be causing them angst. The truth is that markets lack a strong narrative at the moment, and for much of the last 2 years, investors have gotten used to having a story to follow, and without one, markets tend to drift. That needn't be a bad thing for the IPO markets, however, and as we saw last week, investor demand for stocks with the right story can drive share prices to significant first-day premiums. However, those gains can be fleeting, as we've seen in Toast, the Boston-based restaurant software and technology group that IPO'd last week and finished day one more than 50% above its IPO price, yet the stock has fallen by as much as 20% over the last week. The much-anticipated IPO of Goldman Sachs' private equity business Petershill, priced at £3.50 or $4.73, a price which valued the company, which owns stake in 18 alternative asset managers, at $5.40 billion, a figure that was equivalent to 22 times its estimated earnings for 2022. That figure was a sharp discount to its rival Bridgepoint Group, which floated in London back in July and which trades at a multiple of 30 times its prospective 2022 earnings. It looks like that discount was justified by a lackluster aftermarket in the stock. Petershill Partners traded up as high as £3.59 or $4.85, but they also touched as low as £3.37 or $4.55 before settling at the issue price. Not exactly a disaster, but not something that owners Goldman Sachs, who are one of the major players in the global IPO markets, will want to shout about either. It's not all bad news for the London IPO market, however, with recent data suggesting that if you had invested in the 70 IPOs listed on the London Stock Exchange in 2021 to date, you could have returned 42% on your money. Back on this side of the Atlantic, the market's attention turned to two direct listings. These are effectively an introduction to the stock market and allow a business to float without the need for an IPO, its associated roadshows, and book building. Thus far, companies that have chosen the direct listing route have not raised new cash as they list, though they're at liberty to do so. The two companies that chose direct listings are Warby Parker and Amplitude. Warby Parker is an eyewear and sunglasses maker with a roster of blue-chip venture capital backers, which we featured back in early September. Warby Parker, like Toast, has a dual share structure. It's listing A shares that carry 1 vote per share, while the founders and VC backers of the company will retain B shares that each carry 10 votes. The stock has a $40 reference or guide price, which values the business at just over $3.10 billion. Warby Parker traded at $54.05 on debut, a 30% premium to its reference price. The stock finished day one at $54.49, up by a total of 36%. The other direct listing that had the market excited was Amplitude, a maker of analytics software that's seen a 66% growth in revenues during Q2 2021. Amplitude was listed by its 15% private equity owners Benchmark, who followed a similar strategy last year when they listed collaborative working business Asana. Amplitude stock opened on NASDAQ at $50 and traded up by 9% on debut to close at $54.80, which valued the business at $7.10 billion. A traditional IPO deal that's caught Wall Street's attention is that of Olaplex Holding Incorporated, a hair care products brand which is looking to raise $1.2 billion through the sale of 67 million shares in a range between $17 and $19 a share. That pricing was up from the initial range of $14 to $16, and that suggests that there's investor demand for the issue. The company specializes in products that repair hair which has been damaged by coloring, heat, and other treatments, as well as the effects of age. Likely to list on NASDAQ under the ticker OLPX, Olaplex employs just 82 people and was founded in 2014. It generated revenues of $452.90 million in the last 12 months. Those sales produced a net income of $111.80 million. So it's not hard to see why investors are interested in the business. The deal is being managed by Goldman Sachs, JP Morgan, Morgan Stanley, and several other Wall Street firms, and is certainly one to watch from debut. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.